Hello, in this lecture we're going to define the term of cash basis accounting. According to Fundamental Accounting Principles, WOW 22nd edition, the definition of cash basis accounting is accounting system that recognizes revenue when cash is received, records expenses when cash is paid. Best way to think about the cash basis of accounting is to compare and contrast it with the alternative being an accrual basis of accounting. We are dealing with when should we recognize revenue, when should we recognize expenses. These are the timing accounts. These are the income statement accounts. When should we recognize these timing accounts? Under a cash basis, we're going to simplify the method. We're not going to look for the actual place and time when the revenue is earned. We're going to say when we get the cash, that's close enough. And we're going to record on a cash basis revenue when we receive the cash. And on an expense base, we're not going to actually look for the point in time that we consumed the expense. We're going to say, hey, when we pay the cash, that's usually close enough. Let's record the expense when the cash is paid. So if we look at an example, then we have owner A over here and owner B. Owner A is providing legal services to owner B. No cash is exchanging hands, however. Basically, an invoice has been done, so the work has been done, but no cash has changed hands. So if we look at the compare and contrast between a cash basis and an accrual basis, under a cash basis, as of this point in time, even though work has been done, there is no entry recorded because the cash has not been received. The cash will then be received in the future for owner A, so no entry for the cash basis. If we contrast that with the accrual basis is looking for that point in time when the revenue is earned. Therefore, we would record a transaction increase in accounts receivable, increasing income at the point in time that the work was done, usually close to the point in time when the invoice was sent out in the case of owner A, rather than waiting for the cash, which we would do on a cash basis. Owner B over here, we would say that on a cash basis, owner B has consumed the expense of the legal service. The work has been done, but cash hasn't been paid yet. Therefore, on a cash basis, we would say no entry yet. We're not going to record the entry until a little bit later, probably within 30 days or something, when we actually pay the cash, and that can be a bit more simplified. But under an accrual basis, of course, as a contrast, we would then be recording an increase in accounts payable, a liability, and expenses at the point in time when the work is done. In this case, usually the point in time when we receive the bill from the lawyer, being closer to the point in time that we actually consumed the services in this case.